Hi, this is Dion Lyle with Fintech-5. Welcome to this week's Fintech-5. This week I'm going to review the 2019 Fed Reserve Payment Study. Spoiler alert, there's not any spoiler alerts. It's pretty predictable. Payments has continued to grow. ACH, credit, debit, checks, of course, have shrunk. But overall, the payments ecosystem, the value and number of payments continues to grow and reach new records every year. There's a couple things in here that I do want to point out, but overall, I think if you're in the payments business, good news. Up and to the right, steady growth. Now, the number of transactions and the value of transactions are both tracked by the Fed. Checks, as you can see here, have continued a steady decline. For the first time in 2018, the number of ACH debit transfers exceeded the number of check payments. Not in value yet, as you can see here. Checks still exceed ACH debit transfers in value, but the actual number, first time in 2018, that ACH debit transfers exceeded checks. So that's a bit of a good news. Biggest change that I saw, the one piece that jumped out at me is remote general purpose cards. This is your regular credit card, so to speak. What's interesting here is there's remote, and then there's the remote are being used for recurring payments is one of the points that the narrative in the report points out. What I'm excited about is I didn't realize I was part of this trend, but I am. I've been paying a couple things like my health insurance. I've been paying with a general purpose card. The reason I do it is for tracking data, easier budgeting. And it looks like I'm part of the bigger trend, and it appears as though I'm not the only one. Now, you'll notice here on this is in person, this is remote, right? Nice steady trajectory, but look at the value increase in remote, much more dramatic than the actual number of transactions. And I think the reason for that is, like my health insurance, it's quite a large payment. So the value, even though the number tends to track really similarly here, the value of these remote payments is quite a bit higher. So that's probably the biggest shock for me out of the whole report. One of the things here, chip cards continue to rise, virtually replacing non-chip cards. No big surprise, except for, as Ian Kerr pointed out here in 2016, the chip card transition in the US, absolute disaster, really horrible. We all have bad experiences, stories we could share about the beep, or how I didn't get a card in time, or how it took some cards much longer than others to get to me. And then the other thing I still find interesting, most of them are non-PIN transactions. So as noted, checks continue their steady decline. The better question is, why do they still exist at all? Why didn't they fall off in this region here completely? Checks have really outlived their purposefulness and should be gone by now. But Americans were slow to change on our payment methods, right? ATMs. So this study does not track cash usage, as I don't think they have a reliable way to do it. However, I do think ATM usage is a good way to have a metric around cash in general. Now, what's interesting here is foreign ATM means the institution not housing the deposits. So that means where are neobanks, right? Neobanks aren't showing up here yet. It is early, but no neobank or challenger bank owns an ATM, so they can't have an on-us ATM. And people are still staying within their network to do cash value withdrawals. Now, what's interesting here, cashless society, not even close. People are still taking cash out, and this includes me. I just feel better when I have cash. I don't know why. Psychologically, I suppose. Now, the other thing you have to look at, and this is not from the 2019 Fed report, this is from a couple different sources. You'll see here ACI does this really nice summary of cards, benefits versus ACH, wires, alternative, and real-time payments. I think it's pretty realistic about what they say here. I think the key differentiator for most businesses is this data-rich column. I think for consumers, it's the good funds verification or the flexible, maybe the low cost. It depends on the consumer request and need. But you will notice here from Mercator, they show a 56% compound annual growth rate between 18 and 21 for faster payments by segment in almost every segment. That's amazing. Now, finally, the Nacha published that their real-time ACH, or same day ACH, sorry. Same day ACH has really grown dramatically from Q3 2018 to Q3 2019. So the volume across all transaction types really increased there. So as you look at this, you wonder, well, I have a payments business. How do I differentiate? My advice, service. Service is the way you're going to differentiate. And the reason for that is because as these methods become more ubiquitous to everyone, the only way to differentiate your business is with service. Well, that's it for this week's Fintech 5. I'm Dion Lyle with Fintech-5. Thanks for joining. I look forward to your comments.